Hey guys, welcome to another video of stock market solutions. So today's video is gonna be a class regarding the type of candlesticks. So we're gonna go through the 10 most popular candlestick that I use to know if the price will go up or down, and how do I use them to enter, how do I use them to know if we are in a bullish or bearish, or if the movement is exhausted. So just before playing this video, I just want to make a precision, guys. You need to practice first. You cannot just use my class and go trade directly with your live account. You should trade with your demo account, use this type of candlestick and see exactly how it moves like this. You can actually understand the movement of this type of candlestick, because how I use them, I don't use just the candlestick. I need to have a pattern regarding the candlestick, and I also have to have a confirmation with my level 2. So just keep in mind, you need to go on your demo account. If not, I cannot help you more than that. It's just information that I give. This is the most popular candlestick, and the only way to make money is to practice. And even me, with every information that I have, I still lose money sometimes. Sometimes I can have I don't know, a gravestone, and I'm pretty sure that this movement is gonna happen because I have my level 2 that confirmed that. I have a nice support, and I have, I don't know, a confirmation with the pattern, and I will still lose money. Nothing is guaranteed in the life of day trading. So let's start. So the first thing that we're gonna go through is the dojis. So what's a doji? What's a doji? A doji is that a doji form when the opening and closing price are almost equal. Sometimes you can have a doji even if the close price is over or below the opening. It's still a doji. It don't need to be perfect, guys. So what a doji mean is actually simple. It's a lot of indecision. So buyers and sellers are fighting to bring the price either up or down. So you need to, by the way, the name are not important. You need to just understand what the candlestick mean. Who cares if you don't know the name? They are useless. So doji, when you say doji, usually that means that buyers and sellers are fighting, and it's indecision because it closed and open at the same price or a small difference. A candlestick alone doesn't mean nothing. You have to have a pattern, guys. So let's start. I'm gonna show you that. So a doji alone don't mean nothing. So we have here a morning doji star. So a morning doji star is when you have a couple of, when the movement is a bearish mode. So you have a couple of red candlestick, you have a nice doji here. That means that there's an indecision between buyers and sellers. That means also that buyers are now coming in. So when you have a nice bearish mode and you have a doji, that's a sign that price is maybe going to reverse or maybe going down further. So you don't know, you need to confirm it with your level 2. You need to practice on your live on your demo account to actually, the most that you're going to see doji and the most that you're going to see patterns with the doji, the most easy is going to be to spot if the movement is going upside or downside. So when you have a morning doji chart is when you have a couple of red candlestick, you have a doji, and there's a reversal just after the doji. That means that buyers are now in control. Doji means that buyers are now coming in to the game and they are controlling the price. The opposite is going to be an evening doji start. So that means that you have a couple of green candlesticks. So you have higher highs and higher lows. You are in a bullish mode. And on the top, you have a doji. That's a big stop for me. When I see a doji on the top of a bullish mode, that means that sellers are now taken off, entered to the game. And this is almost a lot of time. That means that price reversal, and you need to go short this time. So to give you an example on a pattern, so keep in mind that here it's a doji. I didn't find the best example, but keep in mind that this is a doji. So you see, this is a morning star. This is an example. Like I said, candlestick alone don't mean nothing, guys. You need to confirm it with the pattern and level 2. So let's take this example first. So you have a couple of, you have a green candlestick, you have a red. The color don't mean nothing, guys, okay? Me, the color, I don't really use them. What I see is the pattern. If I see that, even if this is green candlestick, if I see that we are making lower high and lower low, we are in a bullish mode, okay? So sellers are now in control. So we are going down, down, down. And after that, you have a nice doji. This is not a nice doji, but imagine if it was a doji. You have a nice doji. So like I said, that means indecision. That means that buyers are now thinking about enter to the game. And after that, you have a nice green candlestick. Usually that means that the price is now going up. That means that we are now in a bullish mode, that the market is tired to go down and we are going higher high and lower high. The opposite is when you have a nice bullish mode, so the evening star is called. So you have a nice green candlestick, you have a coupled one, and you have a doji on the top. You can use the doji to give you an idea that this thing is about to go down. Usually when I see a doji on top of a nice evening style, of a nice bullish mode, I use the doji to enter. So I'm going to use the wick to see if we are making lower high and lower low. If I see on this candlestick that we are actually making lower high and lower low, I will go short. People will go long here or here, thinking that this thing still go down. You need to expect, when you have an overextended movement, you need to expect that sellers or buyers is going to sell their shares to take profit. So you need to expect a movement either on the down, or people who are shorting like me, we like to see doji on the top of a bullish mode. The next one is going to be the gravestone. The gravestone form when the opening and closing price are almost at the same price, okay? It looks actually a lot like a doji, but like you can see, the only difference is we don't have a wick down here. This one is actually better than a doji because this one doesn't mean indecision. This one means that sellers are in control, guys. The doji one means that we have indecision between buyers and sellers. This one is actually better. This one means that sellers are now in control. Like I said, alone, nothing. With a pattern, it looked like this. So we have a nice green candlestick. Imagine this one, this gravestone, for a short period of time was a big green candlestick, but at the end sellers did come more aggressive, and even if this thing is green and finish with green, I will look to short because we have a nice wick. So we have a big long wick, and this thing is closing at the same price. So I love gravestone. I'm gonna show you a couple of the example of which one I like the most, but gravestone on the top of a bullish mode, that means that the movement is, there's a lot of chance that this thing is going down. Like I said, you need to confirm with resistance, support, level 2, pattern. There's so much to confirm. The opposite is going to be a dragonfly. So this thing is, you have a big long wick, and this thing did close at the same price at the open. So this is the example that come with. So we have a lot of red candlesticks. So we are in the bearish mode, making lower highs, lower low, and after that we have a nice dragonfly. Even if this thing is making actually lower low and lower highs, you need to be careful because this means that buyers at the end of the candlestick, so it depends on your time frame, 1 minute, 3 minute, 5 minute, daily. That means that at the end of the time frame, even if this thing was red, buyers did come into the game and they are now in control, and we have a nice reversal. The one that I like the most are these two, shooting star and hammer. So same as a gravestone and dragonfly, so the same concept. So I'm going to show you that. So we have the shooting star and we have the hammer. Like I said, guys, color don't mean nothing. Candlestick alone don't mean nothing. You need to check the pattern, level 2, and a couple of indicators. So let's take this one as an example. We have a nice bullish mode, so this thing is making higher high and higher low. We are in period of consolidation. We have a doji here. So this thing, usually when I see something like this going up and we have a period of consolidation and we have a doji, I stop my trade, because this thing can either go higher high or lower low. Like I said, doji mean indecision. So for a short period of time, sellers were thinking of going short. And after that, you have the doji, so you know there's indecision. So you can actually use this top of the wick and the slow of the wick to see exactly where the price will go. It opened here. It did make lower low, but buyers were more aggressive. So we have a nice green candlestick making higher high, higher low, and we have a shooting star here. Even if this thing is making higher high and higher low, guys, imagine this candlestick for a period of time was green. So we had a nice big green candlestick. You have two things that you have to understand. First, this movement is overextended. Second, you have a shooting star, so you have a nice wick telling you that sellers are now in control. So this is a wick. By the way, I'm pretty sure all of you guys know what's a wick. A wick is just, this is the body of the candlestick. Everything that is over the body is the wick. So we have a nice wick showing that sellers are in control, and we have a reversal. The other example is with the hammer. So the hammer one is when you have a lot of red candlestick making lower highs. So lower highs, you see that, lower highs, lower highs, lower highs, and lower highs on the top and lower low. And after that, you have a hammer. Like I said, guys, even if this thing did make lower low, I mean, you see this wick, that means that buyers are now in control, guys. That means that be careful. If you are shorting this position, you need to be careful, because this is a sign that buyers are now coming in. The bearish harami, it's also a popular one. It's when you have a large green candlestick. So you have a nice large green candlestick followed by a small red body inside of the body of the previous one. It needs to be inside. Alone, they don't mean nothing. Don't go short the moment that you see that. You need to be careful. This is an example. Green candlestick, green, green. So we are in a bullish mode. We have a nice red candlestick inside of this one. So this one is bigger than the other one. So we have a nice green, big, large candlestick. And inside you have the next one that is inside of this one. And this is red. You can actually, a couple of things that you can do. You can decide to, the moment that I'm going to see this candlestick forming and making lower low, I will go short. Or you can actually use this one also. But for me, I'd rather this one, because this movement is going to be too overextended. The opposite is going to be a bullish harami. So you have a big red candlestick and inside you have a green candlestick. You see that? Reversal. So this candlestick is bigger than this one and bigger than this one. And after that, you see that this thing is going down. So we are in a bearish, making lower high and lower low. And you have a green candlestick here inside of the body of the previous big, large red candlestick. That means that the movement is exhausted. And there's a lot of chance that this thing is going to make higher high and higher low. And we're going to be in a bullish mode. Another thing that is popular is this engulfing bullish. Engulfing is when a small red body that is contained inside, you know what, I'm gonna stop reading this definition, is when you have a big green candlestick that is engulfing the previous one. An example, you have a nice trend here, okay, making lower high and lower low, so we are in a bearish mode, and you have just a random big green candlestick that engulf this previous one. So when something engulf and you have a nice pattern with the level 2, a lot of time that means that we are in a bullish mode now. that buyers are now in control. The opposite is going to be when this red candlestick engulf this green candlestick. That means that we have an engulfing bearish movement. So we have a nice bullish mode, a lot of green candlestick, and you have this one that engulf. And to be engulfing, it really this candlestick need to be inside of this red big candlestick. This example is a little bit tight because if I bring it down, you can see that this thing is inside, but still keep in mind that it need to be inside, that this red candlestick need to engulf this one. So this is an engulfing bearish mode. So yeah, I'm pretty sure that's the 10 most popular. The one that I look to get in, guys, is the morning start doji and evening doji start, because when I see a doji on the top of a nice bullish mode, I use the wick to decide where I want to enter. So if I see that it break this wick, I can decide to go out. This is the time to go short, and I can use the middle as a stop loss, or I can use the top of this wick to use it as a stop loss. So yeah, guys, I hope that you like this video. If you have any question, guys, you can always leave them on the comment. Please drop a like, and don't forget to leave comments. Did you like this video? Do you want more type like this I can make about trend? Tell me what video you want me to do, and I will make one. So have a good one, guys. Enjoy and trade safe.